Hi, I'm Danielle Fagazi with National Mortgage News. I'm joined by Jim Leith, Senior Vice President and National Sales Manager with Equifax Mortgage Services. Today, we're going to talk about the digital mortgage strategies and how they can improve the customer experience while boosting efficiencies and processes. Jim, thanks for joining us.
Danielle, great to be here. Looking forward to our discussion.
First, why don't you set the stage a little bit? Tell me a little bit about what's happening in home equity and what are some of the key trends that you're seeing in the marketplace.
So home equity, as we all know, is very driven by the tax law, and we've seen a lot of changes in the tax law as far as what's deductible and what purposes can be utilized. We are seeing home equities with $109,000 average balances, generally used for college tuition, debt consolidation, some home improvement, and some vacation. So that's stayed fairly similar through the process. But the interesting thing about our current market is the fact that the first mortgage market is having a large impact on re-energizing home equity. What I mean by that is consumers that can refinance at the lowest rates in history have done so. So the idea that they're taking equity out of their homes, they're less likely to go in and take out money with a cash out refi on their first mortgage because they want to retain the low interest rate that they worked so hard to get. So in that environment, it's re-energized the home equity world, but fundamentally there's work to do there as it relates to the traditional lending process and how we lend and what lenders do.
So let's talk about some of the digital options. How are they reshaping the home equity industry?
So great question. The home equity industry itself is adopting that at a slower pace. So when you look at the first mortgage industry, the adoption is higher, and there's a lot more digitization of data with technology and those components. In home equity, it's been much slower. So we continue, while the foundation is still scoring, lending, mitigating risk, technology and digitization really are playing a role because the enhanced borrower experience will drive us to shorter cycle times and a better customer experience. Along with that, as we think about growing home equity, even in the current market where there's demand, we're having a shift in the demographics. We've had baby boomers, and now we're looking at Gen X's and millennials. And in that case, the real component of driving growth is going to come from those spaces. So instead of the traditional lending component, we're going to see things like message boards and other ways to communicate with borrowers that are not baby boomers that really sort of drive the day and create a need for digitized, data-driven solutions in home equity.
So, Jim, that brings me into my next question. With Gen Xers, millennials, how are borrowers' needs changing and how are their expectations evolving?
Well, and that's very relevant because as you think about the lending landscape and you think about what borrowers' expectations look like, borrowers no longer want to track down documents, and even in our own environments and homes where we have our tax returns and our W-2s, there's a lot of effort involved in digging that out, and half the time it's not complete. So because of the way that we're looking at that component, we're having to come up with alternative methods to drive the borrower to provide that information. So in today's data-driven environment where lenders are connected into trusted data sources, it takes out a lot of the risk and other components, and it meets the borrower's expectations. So the challenge that we as a home equity industry really have is that we've got to accept these sources of data and utilize them without asking for supplemental information. And that's going to be a big challenge for the industry, but we already see in first mortgage the GSEs, Freddie and Fannie doing a lot of this to drive change. So that's opportunity for us.
So, what do the lenders today need to do to stay relevant to the next generation of customers coming up?
Well, That's that's the $10,000 question,
Yeah.
right? And so when we've got to look at our processes, we've got to understand the gap, we've got to understand the borrower experience, we have to understand the sensitivity to providing data and the labor involved, not only from the lender, but also from the borrower. So as we start looking at those pieces, then we're going to have to continue to digitize, right? We've just started that, and that's coming on board. And then as you think about the future, the real opportunities, and our company just announced a partnership last week where consumer permission data is kind of the next wave of strategy when it comes to data. So I could see us realistically to stay relevant. We've got to stay close to those sources of data, stay close to those activities, but at the same time, the borrower's getting more control over how you use their data and what for. So technically, or in the future, we're really talking about a consumer hub where you plug in and Danielle, you provide the home equity lender, here's access to my information you need to make this loan. And so I really think that's the component of staying relevant, is you've got to stay on top of what the data and attributes are that you can digitize and enhance your process.
Digitizing sounds like a great idea, but it also sounds like a huge undertaking. Where do lenders get started? How do they even begin this process?
Well, and so it is a concept that you have to get your head around, but we're in an industry that already has instant credit data, and we have instant income and employment data. So really, it's as simple as we want to start there. Let's start with income, right? So there's a lot of opportunity in the industry just to get your income without having to go to the borrower and have the borrower fulfill on it. So I think starting there is a great starting place. And then I think it really depends on what technology the customer's using, so the lender. So if the lender has old technology, which a lot do, right, there are things we can take out of the first mortgage space that can play in home equity. And I'll give you some examples, right? One would be point of sale systems, where we're able to take point of sale systems and front end the consumer loan origination systems to power that process. The downside is there's a lot of manual data entry and you can't map the data to the old systems. That's one. The other would be really converting LOSs from consumer to mortgage, where mortgage is already integrated in a lot of these data sources. And then I think finally just connecting to portals and components or opportunities. So there's a lot of ways to get started, it's very lender dependent.
Let's talk a little bit about HELOCs, right? It's more than just approving a line of credit. What kind of digital strategy, would you take for that? And what's some of the best practices to rolling out that kind of digital solution?
Well, I think we go back to understanding, as a lender has to understand its business and its processes, like we talked about a few minutes earlier, and its gaps. And the reason that's relevant, because when I think about business cases out there that we've worked with recently, we have organizations that have just taken components of data-driven digital mortgage kind of home equity environment, and then we have others that have built out the whole process, because the scale and the budgets and those components are all different. So you really have to start there, but the easiest go to market is really when you look at our company offers portals, and there are other portals out there. You can connect to those portals, you can integrate to those portals, and you can take the data from those portals and drive your entire environment. And so that's one component. The second is the screen scraper. There are also companies out there doing screen scraping. So the point is to get the data at a point where you can, we'll say digitize it, but you're really using the data in lieu of paper, in lieu of process, in lieu of people to kind of deal with these components.
Makes sense. So nobody wants to be left behind in the digital revolution, but there's risks to being the first mover, and there's also risks to being left behind. How do you balance that?
Well, and that's a tough one, right? I mean, we all struggle with that, whether it's in our own businesses or in this component. There's no easy answer to that, right? It's very unique by organization. It's unique by organizational culture. It's unique by organizational lending culture. So you have to take those components and really, instead of sort of being on the bleeding edge. You want to be on the leading edge, and that requires sort of a real deep inward look. But I think the opportunity here, if we look at the goal, is to really replace our labor, the borrower's labor, and the whole process with paper with data that comes across, is digitized, answers the questions, checks the box, and it takes time out of the equation, which is money to all of us, and it enhances the borrower experience to a point that we meet the expectations of the millennials and the Gen Xers that are accustomed to this in-person oriented, engaging environment. So I think the great news is there's a lot going on in the industry today where lenders can connect with their peers, they can connect in the conference world. There's a lot of insights there. There are companies like ours that, we do this with a lot of our clients, and I think the great news is we're just at the tip of the iceberg, and we're in for a great ride.
A lot of runway there. Jim, thank you so much for your insights. We appreciate you stopping by here today. For more insights on how data is creating opportunities in the mortgage industry, please check out the rest of our video series.